Let's welcome on board Umesh Revankar, the Executive Vice Chairman at Shriram Finance, to talk about how their business has been. Mr. Revankar, great to have you today on ET Now. You know, the narrative of your company has changed with the focus on high-yielding mix and revamped post the merger business model. This time you reported an AUM growth of 19% versus your own guidance of 15%. How do you think you're going to evolve over the longer term as well as the medium term?
Yeah, good morning. Yes, we have grown more than the guidance given. We had given a long-term guidance of 15%, and the growth in the first quarter has been excellent, very good. It is more to do with the increase in ticket size because the asset values have gone up. So that has really benefited us, and also we are able to introduce new product in the merged entity in the branches, especially in the earlier Shriram Transport product into Shriram City, and Shriram City product to Shriram Transport. So this kind of product mix and an ability to give a wider range of product in large number of branches have helped us. So overall, we believe that this is going to continue for some time. But our long-term guidance of 15% CAGR would remain.
You've unveiled a Vision 2026 plan as well as we understand for housing finance. And you plan to triple the AUM there, double branch network. Tell us what's been driving this confidence despite the competition that you already have from banks in this sector?
No, we are getting into newer geography. Right now, the lending is focused on few geographies in the west and the south. We are not into all other geographies. So there's a huge scope and opportunity for us to grow in the new geographies. So that is one, and existing geography itself, the penetration levels have not been great in the sense we believe still there is a huge opportunity in the tier 1 and tier 2 and the reach has been just about 20-25% of the potential is our expectation. So I think there is a growth opportunity and also demand being very good in most of the geographies, and we also have a huge network of branches of Shriram SFL, and also there is some inquiries generating out of the cross-selling. So all those things are helping us to get into faster lane.
Right. Now, investors expect strong growth in new segments, the likes of MSME, gold loans versus your commercial vehicle portfolio. Do you think that we can see that happen? What's your outlook in terms of growth there?
Yeah, see, the few things like gold loan and all, it takes time to build the portfolio. But when we start initially, you start talking about the new product to the existing customer and new customer, slowly the products get built in over the period. And once it is built in, it remains stable and grow faster. So even in SME, especially, we are looking at few of the SME, what you call the clusters, and these clusters are very important for us to grow faster. And the SMEs are basically in certain clusters that brings us the higher business. So what we are trying to do is the generating inquiries from the Shriram Transport customers and Shriram, the existing and the new customers, and also trying to get the walk-in customers. So all those things we are trying to do it in the newer place. And our tie-up with like a Paytm and all is also continuing, and similar certain new tie-ups we are trying to do so that we generate more inquiries. And once we have more database and knowledge of the industry, we should be able to do much better. So SME gold is likely to grow faster in our portfolio.
All right, and given that the Reserve Bank has stopped bank and NBFCs from compounding penal interest on loans, what's your assessment on this news? Which segments do you believe could actually be impacted on the back of this?
We have not been doing that. We have been doing the straightforward, penal charges to the customer. And see, there is a difference between what is understood. As long as whatever your contracted IRR is maintained, it is not amount to the compounding. So if there is a delay and if you are collecting that additional amount, to maintain that contractor IRR, then it is quite within the spirit of the contract. So I don't really see, we have not been practicing any other methods of compounding. So we don't see any change in our way of doing business.
Okay. Now, what about the NIMs of some of your peers? There are a few concerns, but brokerages seem to be hopeful that the moderation in net interest margins for the company especially would end given the change towards the high-yielding portfolio. Where is it that you see your net interest margins headed versus your industry peers?
I think our net interest margin should hold good. We are at around 8.3 level. We did had around 8.5 level in the previous quarter. We should be able to maintain in this range. And since we are mostly in a niche segment, we should not be having any challenge as far as maintaining the net interest margin. So we would like to retain or maintain our net interest margin within this range. And I don't really see it is contracting or further reducing.
Mr. Revankar, great to have you today on the show. Thank you so much for taking the time out and joining in.